There are a couple of things you shouldn't do when analyzing or when trading the static indices market. There are things you should do and there are things you shouldn't do. So, firstly, whenever you see an opportunity, despite the strategy or despite your market approach, always wait for confirmations. Always wait for the market to give you a test of your level. Then you enter on a candlestick confirmation or you enter on a reversal pattern, whichever confirmation you use. Always wait for those things to play out before you get into the trade to avoid messing with your trading accounts. So let's get to it. Like in this case, we got the market giving us this double bottom formation. And whenever there's a double bottom formation, simply a W formation, there's always a neckline, and we got one at this point. Basically, we got the neckline of this double bottom formation. So some of you will just get into the trade at this point, like on the breakout of this candle. Like we got this bullish engulfing candle. Some of you will just get into the trade at this point, having your stop loss below this level. So after that, you see the trade going against you. You're getting into the trade without confirmation, without a retest of the neckline. Yes, we got a breakout of this neckline, but there's no retest there, so why get into the trade? So probably you're putting your trades at risk. You're exposing your trades to losses. So simply you just wait for price to give you a retest of this level, to give you a confirmation of this our neckline before you can get into the trade. So we got a confirmation, we got a retest of this our neckline. Then you can see this inverted hammer at this point. This is actually a reversal candle. So you all should check out, or you also research on candlestick formations and how to apply them in your trading approach. It can be really helpful if you can know how to identify candlestick formations and all of that. So we got one at this point. Basically, we got this hammer at this level. This is an inverted hammer basically, and this inverted hammer took the market to the upside. So on the inverted hammer formation, we can see the market giving us this bullish engulfing candle. So next, I'm not saying you should get into the trade at this hammer formation, but this is actually a number one sign we got that yes, the market is about to reverse or continue to the upside. Then wait for the market to give us this formation. Then we take our buy. So you can as well apply your Fibonacci retracement levels for more confirmations, and we got this level at the 50.0 retracement level. These two can be really helpful if you know how to make good use of it. The most efficient levels for retracement is the 618 retracement level and the 50.0 retracement level. So you can see the market got to this 50.0 retracement level and pushed to the upside. So we are getting to trade at this bullish engulfing candle. So if you are to take our buys at this point, you can see how far the market went from this level to the upside. So waiting for a retest of a pattern can be really helpful. Like we got one at this point, you can see the market gave us this inverted head and shoulders pattern. You can see the left shoulder, the head, and the right shoulder. Afterwards, the market broke above this level, giving us a retest with this candlestick pattern here. So you can see the market pushed to the upside afterwards. So let's move and see. At this point, if you have a new structure formation, you can see the market is giving us what higher lows and higher highs. There's a low here, a higher low here, and basically another higher low here. So there's a high here, a higher high here, and basically another higher high. So the market is actually moving to the what upside. The market is forming an uptrend. So we can see we have to identify these our formations, and we have to trade alongside with the trend. We trade alongside with the trend. You can see the market give us a breakout of this level and give us a retest of this point. You can see the market is pushing to the upside. We had a candlestick rejection when the market got to this point with this bearish engulf, this bullish candlestick rejection. Then afterwards, the market filled up with this bearish engulfing candle. Then followed up was this green candle. You can see the market is pushing to the upside afterwards. Waiting for retest of levels can be really helpful and very effective whenever you're trading. Like we got this reversal pattern at this point. This is actually a double bottom formation. See the left low and the right low, and afterwards you got the breakout. You can see the retest at this point. Then there's a high probability or a high chance that the market will push to the upside because I've gotten the first, second, and probably this is actually the third touch, but it's not really a full third touch. But there are high chances of the market going our way, like moving to the upside, because we have seen the overall market structure. The market is pushing to the upside, creating higher highs and higher lows. So definitely there's a probability of this trade going our way. So that's it. So actually took a trade on 51s. Let's see how the trade is moving. Yeah, I got into this trade basically. I took these buys on 51s, and you can see how massive the market is moving from. We are moving in good profits. So let's get back to the chart. You can see we got this our pattern formation at this point. We got this our left shoulder, our neckline, our head, sorry, then our breakout of this our level for a retest, because we got the market bouncing off this level, and probably rejecting after, like this level acted as a support, finally resistance. Then market finally broke above it and gave us a retest. Then you can see the market pushing to the upside afterwards. We saw the market giving us a rejection at this point, but I didn't get into trade at this point. I waited for more confirmation. So after pushing to the upside, the market came back again to give us a kind of a double bottom formation. You can see the low here and another low here. Basically, I got into this trade on this candlestick formation that we got here. You can see the market is pushing afterwards. So that's it, guys. Always wait for confirmations. Always wait for a retest of your levels. Always wait for those rejections on those levels before you get into the trade. So thank you guys for staying through to the end of the video. So to my new viewers, you guys should do it to subscribe, and to my returning viewers, shout out to you guys. You guys are the OGs. Let's keep doing what we do, guys, and do have a wonderful day. Peace out.